Tesla is up today, feeling a teeny bit of love after dropping 11% over the last week. So right now we're seeing a gain for those of you listening on XM Series in the car. Don't drive off the road, but it's only a gain of 1 1/3%. The electric car company announcing plans to raise $500 million by selling stock to fund future projects. In a show of faith in his company and vision, Elon Musk, the CEO, says, you know what? I'll jump in first. I'll buy $20 million worth of those shares through the offering. Is it time to show Tesla some love on that show of faith, or should you go running and screaming far away? We've got a bull versus bear debate on our hands. In the bull corner, Ross Gerber, Gerber Kawasaki CEO, and our bear, John Petrides, Point View Managing Director and Portfolio Manager. On this news today, you would think that when you're diluting the stock, that it would fall. John, you tell me right off the bat why the stock is higher, and you're the bear.
Yeah, it's a great question. I've been reading through the 8K through today and looking at the numbers, and it's really ironic. When you dilute shareholders, it's rare that you see the stock go up. And the last time we've seen this really was the 2008-2009 crisis, when we saw the banks and the REITs
which
who were struggling for liquidity,
right,
raising capital, and shareholders would breathe a sigh of relief looking for the stock to go up because now they had ample liquidity. So when you read through, why is Tesla doing this? One, maybe the stock is overvalued. Right? You buy low and sell high in theory. When companies think their stock is undervalued, they buy the shares. If they think their stock is overvalued, you sell the shares. So maybe it's a cheap form of capital. The second question that investors need to ask themselves is Tesla being shut out of the credit markets? In this era of low interest rate environment with the cachet of an Elon Musk, how come Tesla can't tap cheap debt to fund this growth of the business?
Ross, go ahead and answer those questions. You are the bull here.
Well, yeah, let's start with number one. The last time Tesla did a secondary offering, Elon bought a lot of stock and it rallied as well. How many CEOs in America are putting $20 million into their own company today? Find me any. Okay, and that's the kind of faith investors want to see. And secondly, why should they borrow money and pay interest on it when they can just get capital for free by selling stock? You know, selling stock at I think a fair valuation for Tesla makes a lot of sense for them. But what this really is about is funding them to the next stage of their growth development, with the Model X coming out in the next few months, and then of course the battery factory in full-fledged production now as far as building it. You know, there's tremendous capital needs. So this is exactly what you want out of a growth company, and they're allocating the capital in such a great way. So you want to be an investor in this company over the next several years.
John, and the stock over 5 years is up exponentially. I think, what did we say? Up 700%. Still not a believer in a leader in luxury electric vehicles.
Well, I like to look forward and not backward on a share price. So I don't want to pay.
Oh, snap! He just smacked me down.
I don't want to pay 90 times earnings for a company with a tremendous amount of execution risk. I mean, this is a business where they have to get the cost down in order to make this profitable. And if in the future competitors come on into this market, the price of a Tesla car is only going to go down. So in order for Tesla to keep their margins, they have to get the costs down. Let's not forget that, I know you mentioned on your last segment, the price of gasoline is $2.62 a gallon. The regular car maker, the automakers such as Ford and GM have been since 2008, 2000.
Okay, Ross, there is a big issue here. Gasoline is so cheap right now, and all you see are higher sales of big trucks, and it doesn't matter. What really? I mean, that to me matters.
Right now, it's like 100 degrees in LA. The place is burning up. We have to get away from gas-burning cars, period. They're changing the laws. They're making it harder and harder to have a gas vehicle with higher and higher gas mileage. And we have to have an electric car infrastructure, or honestly, like, global climate change is just totally changing the world every day now. So this is an imperative that Tesla is successful, and they will be successful. There is some execution risk, but Elon delivers and delivers and delivers. If you're thinking about the future, Tesla is the future of cars. You've got to be there.
It just got a great safety rating, as it has over the past couple of years. And my 11-year-old thinks I'd be the coolest mom in the world if I bought one. But again, it's an emotional subject. Ross Gerber is our bull. He's with Gerber Kawasaki. And John Petrides is our bear, Point View Managing Director and Portfolio Manager, who smacked me down. Snap.